Morning, folks. How are you? Just want to watch this opening range this morning and go over some things. We have regular trading hours, opening range gap high up here. This is settlement from yesterday. So we're going to see what we see here in 1 second. So deep, 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 deep discount opening range gap here. What's your manager on this? How are you doing today? Are you doing good? You ready for the weekend? I know I am. All right, so that's consequent encroachment of today's opening range gap. So we'll see if it has any willingness to want to get up into that. We've had a really nice drop off for indices. Minor buy side here. And checked my audio, so I'm gonna gamble today and assume that you guys can hear me. It's impromptu guerrilla warfare tactics ICT is using like now. No warning, just coming out here, starting live streams. And we have a minor sell side liquidity pool there. I'm going to spare you all of the annotations simply because I want to avoid all the boring stuff. You guys know what those lines mean. If you don't, go study the Himalayan salt support and resistance lines. So much fun. So far, we cleared out these relative equal highs here. Minor buy sides taken. It's reasonable to anticipate that. I like the fact that it's shown no real willingness to get up into. Actually, I mean, I failed to. Let me tell you what that is. Let me get this out of the way so you guys can watch. Right, trading out open range gap low. No, right. I'll do 16. All right, so that's the opening price at 9:30 there. We do have, generally it's TGIF scenario where the market could trade up inside of the weekly range. So, you know, up against the weekend with everything going on over there in the Middle East, I've been more or less trying to steer away from TGIF scenarios simply because we've been part of a large range on the daily chart. And in a few minutes, we'll take a look at the daily chart and whatnot. But for now, let's just observe what price is doing here because it looks like it may want to take that sell side. Below that, we have quite a bit of range before we get down to the daily lows that I was telling you that I wanted as my summer target. So it's like the beginning of the first part of 2026. This was my objective for NASDAQ. So we have a lot of range for that. I'm not saying that's going to happen today. Don't misinterpret what I'm saying here, but we have done very well in terms of running that lower low out, staying inside that wick. So there's your sell side taken there. So we have a volume imbalance. See that right there? And we have 931 candlesticks. So this is your first present a fair value gap. Why? Why this one? We have a swing low here. We drop down and we have a volume imbalance right there as well. So look at the open on that candlestick. So it's 13 quarter open, close, 13 half. So it's one tick above on this candlestick's close. So right there, that's a volume imbalance. There's your first presented fair value gap. Okay. And go to a 15-minute time frame, see if we can see anything here that's pertinent. Not so much on the 15. Let's go hourly and then daily. See those smooth lows there. We have a suspension block here, and that's noteworthy. We'll look at that. So we have consequent correction nailed there. This being a bullish suspension block, if we trade down to the lower half of it, if we're bearish, if we're going to continuously maintain bearishness, we want to see price, once it trades below it here, this shaded area, if it trades below that, then we would want to see it stay out of the upper half. In other words, this portion over here, we want to see that stay kind of like a no trespassing. Don't come up here anymore with the bodies of the candlesticks. And then we would see it, try to work towards lower prices. These lows here, we have another sell side. It's an intermediate term sell side liquidity pool. So for those that are maintaining a bearish outlook on indices, that's a minor speed bump if we're going to continuously go lower for this. Don't worry, I don't have a whole lot of time today, so I'm not going to keep you if you're hanging out. Okay, so while we're on the daily chart, let me just use this opportunity to go over here and bring your attention back to a couple things that led to where we're at now. Obviously, if you know, I've been looking for lower prices on indices, and I mentioned how we went below this low this particular day. We went down, took the objectives I gave you in previous live sessions, and then we traded up into it, and then the body stopped here. So I don't recall exactly what day it was. I believe it was either Tuesday or Wednesday of this week. I did something live streamed, and for life, I can't remember what day it was. I'm inundated with the honey to do lists at home before the holiday. So I mentioned how this wick here, because we treat that as a gap, that stuff that's supposed to exist in other books, teachers, it doesn't. The idea is we're looking for, what happened here? There you go. So I mentioned how we were inside this wick. Let me just move it over just one candle so you can see what I'm talking about there. So it's this particular candlestick there. Okay, this one. Trading View, I know you're probably watching. Have your programmers and development team add the date on this bubble. Like when we click on it on the mouse, left button click and hold down. It would be very, very useful to have the date in that little box. I mean, if you're going to have that information, it's just one more line of code. Just drop that in there. Just a suggestion. Thanks. I appreciate it. This wick here, we went up inside that and see how the body stayed in there. Even though we had this little bit of a run up into this imbalance there, and another inversion, volume imbalance there. So watch, let me show you this looks like. We have consumer sentiment numbers at 10 o'clock, so I'm going to hang out until then, and then I'm going to bounce. But you can see how we use this. Look at the wick here. See how it went up there and then fell short of consequent encroachment? Now, as I teach order flow without all the gimmicks, just the visual representation of open, high, low, and close, because they cannot hide that from you, by it not touching consequent encroachment, is this bullish or bearish by my definition? Well, the book of ICT says this is bearish. Okay, it can't touch consequent encroachment. That's wonderful. We want to see lower prices. And just like an immediate rebalance is, well, immediate feedback. You get immediate feedback and price delivery. So the very next candle, what do we see? We're lower. And then we really start to run lower and take out that sell side there. And we're just trading into this inefficiency now. But the key thing was, as I told you, these wicks, you have to have these outlined in preferably graded. So since there's really nothing to speak of in terms of annotations in this range, what I'm going to do is I'm going to show you simply by having the lines graded here, and we will add them. In a quarter. And we're not going to be so concerned about the high and the low of the wick. Okay, so that's why it's not toggled there. So that way we're not worrying about that. But you can take a screenshot of that. There's your opportunity to see what the settings are. The only time this changes is when I'm getting measurements for TGIF. So I'll have a 0.4, 0.3, 0.2. So they're used for TGIF. If you want to know more about that, I have an actual video on my YouTube channel teaching about it. So that's that. So here we have those lines here on the this daily wick. So it's March 9th, micro NASDAQ, and we're using the continuous contract. Notice there is no day, I'm sorry, month in reference to the calendar delivery month. So we're just using continuous contract. You want to do this on both. Okay, I know you're probably saying, well, would I do this on? Yes, you do it on both. Okay, because you want to be able to have the levels in relationship to one another and use the same criteria I use for like these things here. If it can't trade to a specific PD array and a key level in that PD array, because we're not trading zones, okay? It's not a zone idea. We ain't trying. We're not treading into the twilight zone, okay? We're measuring inefficiencies and wicks and order blocks. Okay, so it's all a range theory that's defined by specific characteristics. So if we can't trade to these levels once we're below them, and he acts like this here, that's confirmation of lower or weakness. Okay, so now we have it on the daily chart real quick. Let's drop down into a 1 minute chart. Okay, and we'll just roll back a little bit here. See how they're using those levels here. That's interesting, isn't it? That's really wild. Look how it failed to get up to its consequent encroachment there. See how that? This is heavy distribution. Right, all during this time distortion here, the fact that it can't get up to its halfway point on that daily wick of March 9th, this is distribution. This is not a bull flag. Oh, bull flags. I, I'm, I'm, I'm trying to be a good boy today. I'm trying to be very, very good. I know some of you are like, just let it out, just let it out. Let me just tell you a real quick story with someone. I dropped my son off, and some jerk thought it was a good idea to play the lottery, and he was riding on my rear end. And I understand these people go to work. I understand that. But it was raining. He was tailgating, and I'm like, dude, there's 4 cars in front of me, and there's a distance of 2 car lengths in front of me, and I'm like, okay, I'm not going to speed up for this person, and they clearly can see there's cars in front of me, and I'm literally doing the speed limit. So he's tailgating, and he's raising his hands up in the air in his car, and he's riding over the line, trying to show me that I'm holding him up. He's wailing on the horn, and I'm like, I, I know the guy's probably in a hurry. Okay, maybe he's late for work. I don't know. Maybe he's trying to get somewhere. Maybe he's trying to go watch some kind of, you know, interesting workshop type thing to help him get better in his job or something. I don't know what he's doing, but he's clearly in a lot of a hurry. So I finally get to Mountain Road, and he's riding on my rear end, and I'm like, you know what? That's it. I did something I shouldn't have done. I'm gonna say what I did, and it's something that I don't want to encourage all of you to do. But I had to ask for forgiveness. But I'm wound up this morning, so I flipped him the bird, and I stopped the car right in the middle of Mountain Road, and I got out because I wanted him to get out. I wanted to snatch him up and throw him around a little bit. And of course, because he won the lottery, he was very shocked. He was like, "Wow, this guy got the fuck out of his car. This isn't what I was looking for." And he, sped around the car, went over the shoulder, and hauled ass up the road. So I feel a little unsatisfied. I feel like I got wound up and then cold shouldered. So I have a little bit of hostility that I want to vent. And that's why we're here. Okay. So now I'm going to channel that energy into teaching. So that's what I do. But here's those bull flag ideas failing because why does it fail? Because the stuff I'm teaching you, real order flow, is indicating that it can't get up to that level. So that means it's what? If it can't even get halfway to that wick on the daily chart, March 9th, it's going to do what? It's going to sell off. Then it uses these levels here, breaks lower, then it uses it here with look at the fair value gaps. See that? It's interesting, isn't it? It's almost like this stuff works. The fact that we have levels and PD arrays and blending a higher time frame expectation on price action, um, you get a better view of the tapestry that price action's working in. So we end up moving lower, and now look at this. See this big crazy little spike here? Look at the time it happens. That's not a macro type thing, okay? That's just what I told you the other day. They're doing a lot of Tom Foolery. TOMFOOLERY. Tom Foolery. It's an expression for shenanigans, okay? Uh, in terms of market action or market lingo, it's basically just manipulation. They're false Judas type moves, and they're doing it after the sessions close. So while there's electronic trading still going on, they're they're running runs like that, and they're doing it in pre-session. You saw it the other day, and isn't it interesting how a lot of people, even the news now, are talking about how there was a big volume increase of participation right before that 7 a.m. the other day, and it spiked up about the crude oil stuff, where he was saying basically, we're going to give it 5 days, and we're not going to do this, and we're not going to do that. Well, okay. Then you get this big wild run in the markets. So that's manipulation. That's tomfoolery. That's the shenanigans I'm talking about. And they're doing it during times where I think they're testing it. And now because they know it's being observed, maybe they won't do it so much during the active hours between 9:30 and 4 p.m. Eastern time. But, I wouldn't put anything past them, right? So that's the business there. Let me take a quick look at where we're at here because I've been jawboning. So here we're back in first presented fair value gap. Okay, so we have minor buy side here, and we have the opening range gap low, which is at opening price at 9:30. So we haven't even traded at all in that since its opening candle. So I don't count that little bit of price action here during the first minute. That to me is of no importance. So what I'm looking for is the willingness to want to get above this high. Then we're in regular trading hours opening range gap. And then the liquidity inside that gap, the closest one is this here. Okay. That guy would have got really, really upset with me this morning if he would have got out of his car. I'd probably be in a lot of trouble too. Don't get me wrong. I would have been in a lot of trouble. My wife would have been very upset with me. If he knew who I was, he probably would have got out and dared me. Come on, buddy. Let's go. I know who you are. You're that demo baller. You make all that ad revenue. Yeah. So first presented fair value gap. Okay. Since we pulled up into this, you got to give it the opportunity to perform as a potential inversion fair value gap. Okay, so in other words, we had a little bit of sticking its head outside that range there, defined by that volume imbalance there. So if it can get above this on a body basis, and it doesn't give it really much room, so it's kind of like a just watch and see it. Please don't do anything I'm saying here as a inspiration. Take a trade. Please don't do that. I have people already sending me stuff in the comment section. I made this much money, and I'm like, man, please don't do that stuff. I understand you get excited and stuff, you see it working, but I'm not out here trying to play Oracle. Okay, let's see what the Oracle says. That's not what we're here for. So far, we haven't had a body outside of that, but this is the liquidity inside the opening range gap. That's the buy side. Holding a bearish stance, trading down and then coming up into inversion fair value gap with bias. If it wasn't rather, Friday, say this was Thursday, I'd be all over this shorting it. But because it's Friday, I'm a little reluctant to trust this going down. It could take that low. I'm personally not willing to see that at the moment. I want to see, do they have any real interest to take that first 930 candlesticks high out? If it does, if it can do that, then the liquidity resting over here, that would be the draw. And that's during the pre-market session hours of 7:55. So I'm not trusting it here, even though I do hold a bias that's bearish. It's one of those setups where I would just excuse me, I would just let it go. I wouldn't do anything with it. Now, why am I saying that? Well, because we opened right up at the high of the regular trading hours session. So regular trading hours is this. So we opened, that candlesticks is the high. So if we would have traded, even if it spiked above it and got that high taken out just by one tick, and then it went down in here and started acting like this, then I would look for lower prices and continuation lower. But because it hadn't done that, it makes me reluctant to do that on a Friday because we're up against TGIF. So it's a balancing act of, okay, what type of criteria am I going to use to justify action or inaction? And it could drop off, and some of you may be short, and you'd be like, well, you didn't take that trade, but here's what I did. Well, that's wonderful. That's your trade. But if I'm going to be a teacher and you're going to ask me questions, what makes me decide when to do something, when not to do something? That's a criteria that I would use because of a day of week phenomenon. It's Friday. We've sold off nicely for this week. We've hit a lot of targets at the downside. And while I don't believe we're finished going lower on an intraday basis, this range, it could trade up into that buy side here, which you don't see the candlestick here, but that's that 7:55 1 minute candlestick viewed through electronic trading hours right there. That's that. So in and of itself, this is enough to see it go lower. But that's not a trade I would take personally. So there are some runs in price action I'm just simply not participating in. I know some of you think that I'm quietly, in everything up and down all over the place, and I'm not. Too many things in the market right now that are concerns. Let me borrow this line here because we just took another low out there. See this candlestick low here and this candlestick there? That small little gap there, since we took that liquidity pool one more time, we created a low, broke lower. A lot of you guys that trade these breakout strategies, there's a lot of people wanting to be short now because of that. I'm not arm wrestling on you, okay? I'm just saying that if we can get above this little area in here, let's highlight it. Let me make sure my levels here. Close is 48 quarter, and on this candlestick, the open is 48 quarters. So there's no volume imbalance. So I have it annotated correctly here. So if we can trade above this, okay, so if we get above that, then we can return back into first present to fair value gap. That would be something that would be cool to watch. And we got 5 minutes. I'll come back to this. I want to show you something the other day. I got a couple questions about it. Um, Wednesday, 9:30, go. All right, so the question, we were doing a live stream on Wednesday, and the last few minutes of it, I didn't have a whole lot of time to hang out with y'all, but you can see how they had like supposed diagonal support ideas. I'm sure people would have saw that. And I mentioned how price had already shown all of this jaggedness to the upside. This high was taken there, and this Judas swing there. We gave up the ghost and came back up inside here. Now, what I was showing you was the first resistance fair value gap at this moment there at 9:30. Why is that the first presented fair value gap? Because it's part of a consolidation and liquidity was taken here. So as soon as we got back down into it, if you look inside this little wick right here, let me show you. I do this quick because it's going to be consumer sentiment numbers. I'm going to watch that live with you. It'll be helpful to me while I'm sneaking and looking at the charts while my wife isn't paying attention next week. So this candlestick's discount wick, if you look at that and we measure that right there, I'm going to grade it. We got to get rid of all these lines. If you're trading live today, don't watch my live stream because I'm probably going to mess you all up. I'm talking about other things, and you're supposed to be following your model. So that's consequent encroachment there. So when we traded down like that, there's a wonderful opportunity to anticipate an entry and then expect it to go to these relative equal lows. Now, it does go to this low here later on, but I told you this one. Why? Why didn't I call attention to that one? Obviously, you know that's likely sell side, but I told you to study this that particular day. Why? Because we're inside of a large consolidation. So look for the easiest low hanging fruit, which is this. And it might go down there. That's wonderful if it does, but I don't require it to do that. So that's what these levels are. Just make sure that that 24,351 quarter is not so much an interest above importance than that. Okay, you see how we got real close to it there? So watch this wick in here, okay? Look at the arrow. Look right here. There's my short entry, rate of consequent encroachment there. And then I add, you can't really see it because it's so close to the high of that wick. I apologize, precision's an issue. See it? See it right underneath that little thing right there? That's me adding into this portion, this little separation here. There's two things going on. We have this. This time I got a minute. Gotta hurry up. Right. So we have this sell side imbalance, buy side efficiency, and then we have this small little separation here, and then that's where I'm entering right there on the consequent encroachment of that little separation there. So I'm pretty good at getting in there on lucky entries, and then obviously the exit was below that 24,351 quarter. There's that. You see it right there. So anyway, I bored you with that. You can see how we had really nice little run off that inversion fair value gap and consequent encroachment wick. My levels in my entry are not random. Okay, they're not random. So I'm not even just tossing darts and hoping I get something correct and then saying, "Look at this." Anyway, all right, we got about 30 seconds. Consumer sentiment numbers. Where are we at here? All right, so we went a little bit lower. So we have medium impact news driver coming out. Not all that high importance. We've had a sell-off rate from the beginning, retracement into first presented fair value gap, new lower low, and we have this gap right before it took that liquidity. So let's see if it has any interest in getting back up to that at all. It's 10 o'clock news now.
So how tired you are. You will never be as tired as a cat who has done absolutely nothing.
Really? Or family member sending me cat videos. Well, if it would have been a boxer video, then I would have probably appreciated that. Alrighty, let's see. Oh, there's 3,400 of you watching. Oh, that's wonderful. Well, good morning. Good morning. See this little gap here? If it wants to climb a little bit and get to this gap that happened right before the sell side was taken, we would want to see it try to get above this. As long as it stays below it, lower prices are likely, but we would want to see this type of thing happen here. Let me see, what's the open? 7.5, and the close is 7.5. So there's no volume imbalance. So I have that drawn correctly there. So we want to see this. So far, it's hit consequent encroachment there, and it's doing as it should. Now watch that volume imbalance right there to the consequent encroachment of this wick. Bearishness gets a body close below the midpoint of this wick. If it can't even get down there and it trades back above here, then we would likely see it trade up to this level there. Deep reading with Mr. Rogers. Some of you are thinking, wow, this is the second time I've heard ICT talk about road rage. I actually wasn't road raging. I was trying to diffuse the situation, but he just insisted that I get out, and I did, and then he changed his mind. I don't know what to do about it. So remember that daily chart, buy side and balance, sell side efficiency. The low of that's what we traded to here. Okay. So we traded down to a higher time frame daily level. We colored outside the lines a little bit, and we're showing a willingness to go back up higher. Now we're at kind of it's like a measuring stick or a gauge on determining the the, the likelihood of continuation. So for tape reading purposes, while you're learning, while you're studying, okay, you're not trying to take a demo entry, you're not trying to pass your funded account challenges, you're not trying to get to your payout, okay? You're not doing that here, okay? When you're brand new and you're looking at things like this, you want to measure the willingness of what price is willing to do at key PD arrays. We had this low taken out by this run here. We traded down to the low of that daily PD array, which I'll go back to the chart in a second to show you again what this range in gray is. But to have this level here, the bodies are showing what if you were bearish, you're seeing exactly what you would like to see. But I'm suspecting that it's not likely to continue only because we started out the gate right away lower, First resistance fair value gap delivered beautifully. Traded down to the low of that daily discount array. So we colored outside lines of it just a little bit there, and then we rallied up a little bit. The body stayed outside of that gap, and I told you to watch that volume imbalance there to the consequent encroachment. It went right down into that, overlapped it a little bit, but now this opened right below consequent encroachment. If if I was short, say I was holding a bearish position, I would not want to see it leave a body in the upper half here. Would not want to see it at all. I would not be willing to see that. So if I was short, I would have trailed the stop loss and I'd be just about right here above this candlestick's high. That's where the stop loss would be if I was short. Because if I'm getting stopped out there, chances are it's going to go higher, maybe to this inefficiency, and I don't want to open up myself to larger risk. But if I'm bullish, or if I'm anticipating a run to this level here, or maybe trade back up into this sell side imbalance, buy side inefficiency, consequent encroachment, that point up there, I would want to see it trade into this area here and lay down a body and then go outside the upper half of this, just even a wick alone. And then we would want to see the lower half not trespassed upon and just then run up into this area here. That's tape reading. That's all you're expected to do when you don't know what to do yet. When you're trying to learn, you're not out here trying to make my models work in your hands. You're skipping over all these steps. To daily chart real quick. Remember that gap I just showed you earlier? That's where price went down into that. Okay. So in and of itself, that's wonderful. It's nice to see that that was used during the live stream. The next order of business is down here. We do have that consequent encouragement there. So say for instance that we resume going lower in the latter portions of the day, going into the close. That might be a draw, and they may leave this intact, not trade through it, on a Friday. But down here, consequent encouragement, that wick right there, that's definitely a level you want to have on your charts. If you're short from up here, like we were talking about, you want to be considering that maybe as a partial. Just a suggestion for your demo examples. Real quick, let me just breeze through the majors. Dollar index, we didn't see it act as an inversion fair value gap, which is nice. So there was no retracement down in here. We rack above. So now this needs to act as your standard bullish GD array. If it trades down to it here, it needs to keep the bodies out of this. Now this becomes the line in the sand, whereas this was before. I'm not so much concerned about this anymore. This is the line in the sand now. So it needs to stay in the upper half to ring going higher. That's the dollar index. Euro dollar, real quick. All right, so we saw there's the low I'm looking for still on euro. And if we get that higher run on dollar, it should be okay for it to get down there. I told you these two sell side and buy side efficiencies inside of these wicks. It's it's difficult price action. You're just going to have to grind through it and stick into a narrative and a bias, looking for lower prices on euro, higher prices dollar. You can see how they've been utilizing it here. It's still not easy, but we'll see. I like the idea that these lows, if you look at them, diagonal retail support ideas, I'm usually cannibalize that type of that mindset. So that bodes well for the things I like to look for. How we trade today, it's irrelevant. Over the coming weeks, I still think that this is a likely scenario on the downside. And pound dollar. How you guys been able to get gas? You got fuel? Australia's having issues. Africa's got issues. Philippines. So we want to see this break down. Once it gets down in here again with the bodies, this upper half needs to be respected. So in other words, order flow would be bearish, leave, come back up in, do not approach the upper half once it does this run below there, and then reaching for these lows. That's what I'd be looking for still on pound dollar if you're tape reading it like I am. And crude oil. Down into these inefficiencies. We traded there. We have minor buy side, consequent correction of that wick. If we gap open higher above that, it's probably going to be off to the races then. So yeah, there you go. Again, it's very difficult to trade it. I expect it to go higher, but I'm not in it. Please don't do anything with it based on anything I'm saying. If you make money, it wasn't because of me. If you lost money, it sure as hell wasn't because of me. So just know that I'm not in it. I'm not putting you into a trade, but I am expecting higher prices. About $180 to 200 plus per barrel. That's kind of like what I'm anticipating. Now all the news people are saying the same thing now. If it wasn't a wartime thing, usually I would be fading what the news was saying, but because it's just so obvious what they want to do, it fits the 2030 agenda. Now that's also being buzzed about too. Look on social media, you'll see a lot of things. I'm usually 6 months to 2 years ahead of everybody else. I know this guy likes to talk about himself. Self-love. All right, so that's the Brent. We have relative equal highs there, so I think they'll want to run through that. And then take a quick look at gold. Targets here had been met. Trading inside of a volume imbalance there. I'd like to see it gap lower below consequent encroachment of this wick. So I'm going to take these lines off since they've already accomplished the method of what we were looking for. I will drop this one down to here, but I'm going to draw the consequent encroachment on that wick there. I'd like to see it gap below that. And if you can gap below that on Sunday opening and then remain heavy, in other words, gap below it and just keep going lower and take out that low, boy, oh boy, that is very bearish on gold if it can do that. So that's something I'm watching on Sunday. And then silver real quick. Kind of similar scenario. The we ran these lows out, so that's already done. We can take that off there now. And we traded into this volume imbalance. I still suspect that's likely here. But same scenario, let's look at that wick. If we can gap below this on Sunday opening, gap below, and if it stays heavy and takes out the low of that wick, very, 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 very bearish. Very bearish. So there's the business on that. And I think, what was the other one? Bitcoin? I'm probably wrong on this one too. Look at this. I don't know, man. I don't know what to tell you. So we had this run here, taking liquidity out. Here you go. Can you teach me how to use fair value gaps, ICT? Sure, buddy. I can do that for you. You can see a old high or relative equal highs that are traded to and through. That is a purge of liquidity. Okay. If you can see a gap right before that occurs, that one right there is going to act as not a bullish scenario like you see everybody on YouTube doing that. I would be interested if it comes back to that, and I'm correcting them, but they're going to tell everybody that they know my stuff better. I'm not selling you anything, but I'm out here telling you what's going to happen beforehand for free. This is going to act as an inversion fair value gap, so that way you can go in. I know we're all over the place today, but I wasn't planning on doing this. You can thank the guy that was tailgating me this morning. Drama's my fuel. So if we have this buy side and balance, sell side, excuse me, buy side and balance, sell side and efficiency. And yes, it's not drawn correctly because I'm going to check myself here. The close is 831, open 849. So that is an imbalance, isn't it? Or am I reading that wrong? I don't trust these old eyes, I'm telling you. Oh yeah, there is. Look at that. It's just like it's like It's habit now. My brain just automatically just clicks on it. I'm not even really thinking about it anymore. I'm the algo. So we have this inefficiency now becomes inversion fair value gap. Now, as I teach real order flow, no gimmicks, no look inside the candle, how many orders are at a specific price level. You don't need to know that. Split the range in half. That's consequent encroachment. It trades up to it, but fails to touch it. This is just like immediate rebalance. It's immediate feedback. It tells you if you're bearish and it does these types of things, the next candle should give you immediate feedback that you're on side or your expectations are shortly going to be brought to pass. In other words, we're looking for, let me say it this way. I was saying lower prices. Go back and watch the live streams. I was saying lower prices. And you can see how we went up in here. Look at the body. Look where it closed. Now you're going to tell me that that level, that's what you're going to use that candlesticks high. That's what they teach in the books for support and resistance. God, there ain't no way. There ain't no way. That's not in your books. You know it. It's not in your books. But look at the body's closed there. Isn't that interesting? And look at the open here. And you think that this shit isn't rigged. I told you as soon as they put it on the futures market, it's owned. It's owned. That's what they do. That's what they do. All of your crypto bullshit, it's a facade. It's fugazi. That's what that is. That's exactly what it is. Why is it working like this? If it's perfectly outside the reach of all these bad people, these banks, these fiat puppeteers, why the hell is it doing that? The open on this candlestick is exactly where you would expect it to be. If this is going to be the logic used for lower prices, relative equal lows, trades below that. You have a little bit of sell side here, but it would need, for me, I'm not trading this stuff, so that way you guys know. It would really need to get really amped up once it gets below here. Okay, so this is my interpretation of what's done here. I think it's basically creating a little fractal of that same premise here with lower prices, and then it's my next objective there. Or I shouldn't say objective because it makes it sound like I'm in here making money off of it. I don't trade crypto. I've never traded it. So that way, for disclosure and disclaimer purposes, I make nothing off of trading Bitcoin. I make nothing off of crypto. Nothing. Zero. I only talk about it because I have students that twist my arm in the comment section. Please, 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 please talk about Bitcoin. I'm probably wrong. There you go. Okay. I've been telling everybody this is where it's going, below that. And then ultimately, my real target is there, 0. Okay. Just think of Luna because that's where it's going to be. And if I'm wrong, you guys get the chance to come back and laugh at me. But, that's not why we're here. Okay. I know a lot of you guys are fanatics about this stuff. Like, you've never traded anything before, but you have your whole entire life savings in this stuff. And you don't like the fact that I'm saying something like I'm going to cause it to go down. I'm not causing it to go up or down. It's just my opinion, right? Let's take a quick look at MES, micro S&P. I got to be careful because I'm going to end up going over an hour, and I don't want to do that because then the recording doesn't allow you guys to pick up on the benefits of the AI translations. I got to tell you, live streaming this stuff is a whole lot easier. It's very, very economical for time. I don't have to go in and edit anything, but you're going to get the rough stuff, like me almost knocking the microphone off the table here just a moment ago. It's a carnival-like atmosphere around here, man. This is what it's like. So, yeah, S&P it took its lower low out. Just be careful the rest of the day because we pushed it down below a low of Monday, and it could go lower, but because it's TGIF, just be careful. Just don't marry the vein. In other words, don't think that it has to do this now because they can keep it inside the range and then gap it open way down lower on Sunday at 6 p.m. And you just can't participate in that. That's the kind of climate we're in. That's when I say Tom Foolery, the shenanigans. They know where they want to take it, but they also know there's 2 million of you listening to me, and you're all looking at the same levels I'm looking for. So if they do it between the sessions and you can't participate, but they are able to do it, that's how they're going to beat you. So that's what I'm trying to tell you. I'm talking to you in a way where if you understand what I'm saying, that's how it gets done, and you can't profit from it. And the more, the more proof that these types of things are happening, and people are paying attention to it now. You know, it's funny how a certain person comes out and tweets about something. I'm not talking about myself either. And all of a sudden, the market reacts, and then you can go back and say, "Wow, look at this! There was a big influx of trading right before that came out." Right. So if there's a vested interest in doing those types of things right now, you got to be careful. Like you got to be careful, and that's why I'm talking about micros. Because if I'm going to influence you, I want to influence you where you're going to trade the least leverage, so that way, if you do something wrong in your own hands, you don't hurt yourself catastrophically. That's what I'm doing. That's why I'm teaching in micro. Okay. All right. So Dow, let's see what that's doing. We have that low here. So it looks like it could do it. Same idea here. Look at this. We have volume imbalance, volume imbalance, trades up, way outside of it. It needs to stay in the lower half, never come back up in our half. It trades to it here, and then it can't even get to consequent encroachment. So is this indicative of bullishness or bearishness? Trading order flow the way I teach it, visual. Okay, you don't need to look at data crunching and how many numbers are around a particular price. You don't need all that stuff. It's very easy. It's very friendly. Okay, to the newbie, even to the guy that knows what they're doing. It can't get to consequent encroachment. So the next candle should give you what? Immediate feedback. If you're bearish, should it go lower? Yes, we have a down closed candle. And then we have a follow through the day. So just trust me when I tell you this stuff, okay? It works. Just trust me. Take some time in the charts and you'll see it in your hands. And then you'll never have to worry about the opinions of other people that don't know shit all. All right, so MES, we'll go back to that. Take a quick look, and then I have to get out of here. So, all right, so that's the business there. What time frame we want to look at? Where did my annotations go? There you are. Oh man, ICT. So here we have the market trade above. Now watch. If this is bullish, if they want to make a run to take out, say, the 930 opening candle, and that's like right here, right there. Watch the price action in here. This is okay, but you can't leave bodies in the lower half of that. Can't do that. They'll get this inefficiency here. This has not it has not acted as inversion yet. About like a mountain climber. Okay, I've used this analogy before. Say this is the rock surface that you're standing below the base of. Okay, here's the part at which if you climb to that high, that's the goal. So this is the range you're inside of. And whenever you're looking for things to tape read, to practice, it's not an ego report card. It's not about trying to do a demo account trade. What you're trying to see is what signatures are in play right now based on what you're watching in price action. Let me put this consequent encouragement on real quick. Okay. This range there, half of that would be, where are we at? Low to high. Yeah. So we traded just above. So we went to a premium, but failed to get into this inefficiency. So that by itself, if it were Thursday, not Friday, I would be selling more here, looking for that low to be taken out. because it didn't get to this one here. I'm still leery of that. So I'm looking at this here as a low day for right now to see if the evidence around these levels here can support the price. So far, it has not acted as inversion fair value gap. So since it's moved above it, now we went down below it. If it can climb outside of it here, then the criteria is this stays kind of like a no trespassing. You can't leave a body down in here. This painting back and forth, this is the part that people think, oh, they don't work. It doesn't work. You have to have the understanding of what it is it's supposed to be doing. By it trading above it here, that's wonderful. Now it becomes, now you can watch and see, does it give you the scenario? It validates it by taking it out on the downside. So what has it done by doing so? It trades above it and below it. So now this takes on the characteristic of a balanced price range. That specific candlestick right there, that's what it's doing. That's the function. Okay. When the algorithm refers back to these levels, it uses scripts and logic to support price or reject at those levels. We went below it here. So now we've done two passes. We've done buy side delivery, not liquidity. That means just movement through a range up. Then it had sell side delivery, which is movement simply going lower. So now if this PD array is valid, and it should act as a inversion fair value gap, that can only be done now if it trades outside of it. And then any movement back down into it here needs to support the idea that it's not going to be willing to lay a body in the lower half once it leaves the upside of it here, this part here. This is not enough. It's got to do it on a body basis. It's got to close outside of it. That's inversion fair value gap. If you're not seeing those things happening, you can't come back and say, see, it doesn't work here. It doesn't work here. It doesn't work. And I have so many people literally in my comments, this thing failed here. This thing failed here. And you look at price action, it's like, you don't even know what you're doing. And there's people out here charging people, trying to teach something they don't even know the fuck they're talking about. Hmm. I'm going to compare um, the S&P with these highs right here. Okay. Just give me a second. MES. See that? That's a little S&P divergence right there. Back. NQ. It could stab down there and get that consequent encroachment of that wick. See the bodies on the low of that right there? So right now it's still operating underneath the idea of a reclaimed bearish SIBI or sell side imbalance, spot side deficiency. When you're tape reading, you're not trying to hold yourself to being right or wrong. You're just trying to collect information on how price reacts off of specific things. You're basically in here trying to see if there's rules that I've submitted on this YouTube channel and in audio lectures also in like Twitter spaces and whatnot. If that logic is in play with what you're watching in price action, if you're seeing those things happen, then you are probably in a market condition that is conducive for good paper trading. Let's say it that way. But in the beginning, you shouldn't expect to know what you're doing because you have to discover whether or not these things I'm teaching you hold water or not. So many of you skip over that and you think, well, he must be teaching what works, and people talk about they make money doing it. So let me just go out here and try to use it and try to pass a funded account or trade with live funds, and you discover you don't know what you're doing. And instead of being responsible and saying, well, I didn't really do the job of testing it, back testing it, figuring out how I'm supposed to do it myself for a couple months in a row, you just jumped ahead and tried to just FAFO, and then you did. And you can't walk away with that and say, this stuff doesn't work. It just means that you didn't know how to learn how to use it first. going on with price action? See that sitting there? Like, what's going on here, man? It ain't moving around. Come on, Phil. Start sending this thing somewhere. Sitting over there in Switzerland laughing at me. Come on, say something next. Who's Phil? If it can close below consequent encroachment, that would be indicative of likely make another lower low. If it takes out that low, then we're probably going to stay heavy the rest of the day. There's a lot of things in this price action already that's one-sided. The fact that we came up in the first position, very bad gap here, beautiful, nice sell-off there. We failed to get to this inefficiency, so that is what? That's weakness. We had S&T between ES and NQ here. Sold off, but we're up against this big wick and net volume imbalance. So what is that? It's taking two ranges. Whoa, what the hell was that? Trading views, stay out of my charts, man. You know they're over there. They're like, okay, pull up ICT's charts. Because what you see me putting in here, think about when you leave trading view. Okay, when you leave trading view, you sign off. All your annotations are right there when you pop them back up. You know damn well these guys are over there like, okay, he's got this annotated, and I know I annotate shit during the off time, and I'm like, okay, I'll draw a line here. I tell my kids all the time. I say, watch this, just in case they're looking at shit and following me. You better not do that shit. You better not do it. They just messed up and he hurried up and toggled my range away. Some of the trolls are like, listen to this guy. He's schizo. He thinks that trading view is changing his annotation. No, that's not what I said. But it's going to get you guys talking about it, isn't it? Going right into the weekend. And more people are going to come because your followers going to see what they talking about. And they're going to come back and say, he just called all that stuff and it happened. Yep. That's how you manipulate social media and never have to pay for advertising. Small little gap here. Volume and balance there. We right up into that. It would need to sell off this candle or immediately the next one to get below consequent encouragement if it was bearish. Like say, for instance, I was short. I'm not short or long. I haven't done any trades today at all. But based on what we're seeing here, it would need to get real animated to the downside here. This line off here because all this line here is simply just measuring premium to discount. This is equilibrium right here between this high and that low. If you watch that, see the red line moving around? That's just anchoring to midpoint. So we went to a short-term premium here, traded lower. I would be a little nervous if I was short simply because it's spending way too much time in this range. I would want to see it get real aggressive to the downside. See what they're doing? Put it back, man. Leave it alone. We're in there changing my annotations. But what happens if it just sold off and went down another 300 handles? It wouldn't bother me. I wouldn't look at that as, well, I wish I would have done this. I wish I would have done that. Because I have protocols. I have things that tell me this is a condition. This is a market environment. that is conducive for me to potentially be wrong. And if I'm wrong in those conditions, then I'm not worried about it. I want to be in market environments where I'm most likely to be correct with my analysis and not get caught offside because of just simply me trying to participate, just because there's opportunity to do so and availability in market price action. I want things to be in my favor, and the more things I have in my favor, algorithmically, all the boxes that I like to look for, the more of those being toggled off in my favor that I'm probably going to see the move materialize, then I'm going to trade in those environments. But if it's likely that I'm going to be wrong, if it's likely that I'm going to, well, we're inside high resistance right now. Is it running? It's spending too much time in this range. I don't like that. Despite the fact that it couldn't get to here, despite the fact that we poked outside of this here and we use it as a continuation or reclaimed bearish fair value gap. Even though it's done those things, even though that we had this little movement here in this SIBI trade up here and move lower, the fact that we have not ripped down below consequent correction of that wick, that to me is indicating, it's signifying I'm not interested and I wouldn't be a part of this move anymore. I wouldn't want to be in it because we're in a climate where it could be a tweet coming out. A tweet could come out and say, all right, they surrendered over there. What do you think the market would do? Go vertical, 700 handles in like 5 minutes. So because of that type of stuff, whenever I'm seeing a lethargic price action, when it should be delivering, like right now, there's no reason for this thing not to start careening towards that consequent correction at red level now. Everything's in play. Everything that you would expect to see in price action. It needs to drop here. If it fails to do so, that to me is problematic for being short. And if it's not likely to go lower while we're in the lowest portion of the daily range during regular trading hours, that means from this candlestick's high down to that candlestick's low. Where are we at? We're in a deep, deep, deep discount. And when you're short, or if you're trying to get short, you don't want to be getting short like this because it's already pressed down so deep, and you want to see price really take off if it's going to be bearish. And because it's not trying to do that, to me, it causes concern. It doesn't make it feel obvious that I should be in there taking the trade, or if I was short, that I feel comfortable. I would be thinking to myself, okay, should I be taking off partials? Should I be doing something in terms of taking some of the position off when I see those types of things? Now get below that and close. Sure, if you guys can hear that, but I have lots of animals and birds that come around my house and they're out there singing. All right, so if it closes below that line, then a sustained price run below that low is in play. One more touch to that daily fair value gap and efficiency on the daily chart. We showed on when we were looking at daily. It's off now. Now, if it wants to continuously go below this low here, let me thicken this up quick. What I'd like to see is this portion of this gap here. I would like to see that stay open. If it can stay open and trade below that low, I like to see those types of things in price action because it's showing potentially a breakaway But if it comes back up and closes that in, I don't like to see that. So in your notes, um, when we're in on a Friday and we're looking for a low, even though we're bearish, or let me rephrase that, even though I'm bearish long term, intermediate term, moving below old lows is always a welcome thing. That's the direction, that's what we're looking for. But if it's doing so in a manner where it's on a Friday, it's been one-sided right from the opening, if it has these little gaps like this and it fills in that gap, I don't like that, because two things can happen. Number one, it can trade above this here and use it as support to go higher, or any run below that low could now be stunted. In other words, not see a whole lot of continuation below it. It can, but it's more likely, in my experience over the last 30 plus years, these types of scenarios, I'd rather see them stay open and then go below that here. And then everybody else would expect it to trade back up above this low to get to that gap and then go short. That's not what usually happens. Think about think about what I've already said to you about how picking fair value gaps. What are we anticipating here by being bearish? Well, if we're bearish, we would want to see this low get taken out. So a fair value gap, before it does that, what have I been teaching you? They act as inversion fair value gaps. So now you understand the logic, okay? You already know more than most people out there trying to teach inversion fair value gaps and trying to get paid doing it. All for free. All for free. And wait till you see what I got when I come back from my break. Bro, you're supposed to be on break right now. You said you wasn't coming back to X. I'm not on X, am I? It's all in the fine detail, the fine print, baby. All the updates will be where? YouTube. See how much time they're spending inside this gap? That's also, I don't like that either. And we're at the low end. We're at the lowest point of the range. I'm going to take this little shaded area off because that's that daily fair value gap we were talking about. And I want to draw a box here. You're going to have to be mad at me because we're already past that time where people can use the translation stuff. I apologize. I'm sorry. So there's your regular trading hours range for today. Okay. We are in the lowest portion of it. We came back up into this gap here. I don't like that. Even if it takes out that low, I don't like it. So what we're going to watch and see is if we can take that low out, even by one tick, does it melt and go lower and accelerate to the downside? Or do we enter back inside the range that's shaded here? And well, let me change the color real quick. Okay. The drop below this should not see it return back inside the range. It should break below that. If it's really bearish, it should break below that low and accelerate down with a lot of energy. But if it just goes below it by a little bit and then wants to quickly get back inside this range, it's like it's like a little dog on the porch. Okay. And it runs off the porch and starts barking at another dog on a leash. But that dog on a leash is a kind of corso. And it turns around and tells that little dog, hey, get back on your porch. And it runs whimpering back on the porch. That's not strength. That's what I'm trying to illustrate. Where is if it runs below this and takes off, you want that dog coming off the porch to be the kind of corso running after whatever it wants to run after. It's very few things it's going to be afraid of. Someone's looking at me, nodding like that makes sense. Trust me, there's about 50 people out there that it didn't make any sense to them. See how much time? See how much time it's staying in that gap? We don't want to see time distortion inside of inefficiencies. That's not what you want to see. You don't want to see that. So that's the open at 60 even, close 60 even. So this is the little inefficiency here. A tiny little portion of price action right in there. See how many times it's used that little area? Now contrast that with when the market's really wanting to move. It'll go in there one candle and then it's gone. It leaves. Elvis has left the building. That's what you want to be trading in. Those environments where you have quick feedback. The price action is telling you exactly what it wants to do. It's in a hurry to get to your targets. That is low resistance liquidity run conditions. This, even if it trades below that low, even if it takes that out, this is what I'm teaching you not to look for. Don't look for these types of scenarios. You want them to be, well, when you want to see gaps left in. You want to see portions of price action left there unfilled. That is where you'll have a lot more freedom to see price move around. See what we did there? Just stuck its toe outside the fence. The little chihuahua just got out there and said, "Brr, brr, brr, brr," barking. And where's it back? Right back on the porch. Not good. I don't want to see that. And because we're so far deep in the range of the opening range, I'm sorry, I said that wrong. Regular trading hours range of the day. In other words, this, you toggle the regular trading hours. This is the full daily range here, viewed from regular trading hours only. And we're at the low. We're down here at the low of it during a time when what? We're getting ready to go into the lunch macro. So there's so many things leading as a offensive stimuli that prevents price from being quick and sudden and moving for you when you're bearish. I'm trying to articulate a way for that way. Right there. If you're bearish, does this look good for you? Do you look at this and say, wow, this is exactly what I want to see after it took out the low by a little bit? That's what I'm trying to tell you, to look for those types of things. Let's go back into there. So now watch this here. It can trade back down into that and see, because we went into it here by a little bit and then we went out of it. So we've done two sides. Now, if it trades down into that, let me make it a little bit bigger here. If my wife comes back to the house, we will have a abrupt ending. Let's put it that way. But I'll hang out with you for a little while. Maybe you might learn something. Maybe you might learn something from the old man. All right, so price went just below that low in a deep discount. And that gap here, we traded through it, got real close to it, but notice it didn't even touch it. If it can't come down and touch that, but it goes into this one here, I'm going to remove this box. It's just simply highlighting where we were in terms of the regular trading hours range. If it trades up into here, then we probably made the morning low, and then buy side right here is the lunch macro. And this is all that you're expected to do when you first start. It's very forgiving. It's observing. It's weighing out things. What does it do now that it's created this? What does it do when it creates that? Is it able to overcome this level? Is it able to move quickly away from this level? Look at the time of the day it is. It's all of these types of things that you're trying to cheat yourself from learning. Like, you're not going to learn my stuff. You're not going to learn it just going here and watching my video and assuming you know what it's like because you watch me do it. And you can, paying somebody else to teach my shit to you, they're incomplete. And I love my students, and some of them have proving they make money with my stuff, but you're not getting all the details that I have. There's nothing wrong with learning what they're doing in their interpretation of it in their own hands. There's nothing wrong with that. Zero wrong with that. But you're not getting, they don't know what I know. Okay. They don't know it. The fact is, they're watching this and taking notes. Now, you see these things like this where it drops down. We're going to see that as a continuation pattern, retail. And I told you, watch this low. Okay. If it trades below that, it might fail. Why? Because it spent so much time in that gap right there. That's logic that you don't find in other books. Nobody's teaching that stuff. Nobody's teaching that. I mean, I am, but it takes authorship to know those types of things. And we couldn't even touch that. That's bullish. I told you it would run into this. Look how fast we did it. We opened here on this candlestick, traded down to the low end of that, and couldn't even touch the low. What's this candlestick's high right here? Okay. Watch this candlestick's high. 509 half. Okay. 509 half. This candlestick's low, 10. So 2 ticks. Couldn't touch the low of it. Watch and see if it wants to do it here. In a perfect world, if it wants this right here for the lunch macro, taking that buy side there, it won't lay a body down in the lower half. It can because there's a small little inefficiency right here. You see that? That's why this is okay. But if this wasn't a gap here, I would want to only see it trade into the upper half. Wick in the lower half, that's fine, but not lay a body down. But because this inefficiency is here, it can trade to its consequent encroachment of that and then leave a small portion of this gap here. Well, let me show you. Not enough to know. Show me how to get into a trade that works. You have to know what is indicating that the market's not likely to deliver specifically. You have to have protocols and processes and things that are they're defensive mechanisms. Everybody has the gas pedal in their car when it comes to trading. Everybody knows how to floor it. You know how to over leverage. You've wrecked enough accounts to prove that. You know what it feels like to get in there and chase a run because you're afraid you're going to miss it because you don't know what you're doing. Okay, you're looking in the rear view mirror and you're trading with the rear view mirror instead of looking ahead and saying, okay, I'm coming up to this area here at this intersection. I'm going to turn right. As soon as I get there, I'm turning right because the market's going to go this direction. 99% of you are looking in the rearview mirror and saying, wow, prices already did this. So I guess I better go long. And what I'm teaching you is how to interpret price action right now, live, and the barriers and where you need to have a detour because sometimes the pothole forms right when you went over top of it. Now, what do? That's the reality of market trading in real time with real risks. You have to weigh all that stuff out. Down here, when we were looking at that low, this is a potential hazard. It's a hazard. So anticipating a price run below that low when we're so deep in a discount from the first candlestick at 9:30, you have so many things against you in and of itself by itself. Then it's Friday, and it's been one-sided from the opening bell at 9:30, and then we start seeing fair value gaps here form. There's benefit in knowing when they're not doing what you think they should do. This is what these assholes on the internet don't get. If I have a PD array that I'm watching, if it's not performing in a manner that I expect it to perform in, that's intel. That's insight. That's giving me a means of measuring real order flow. I can see whether or not there's a willingness to support the run continuously from that level or not. That's what's being illustrated. And if you don't have those types of things in your repertoire, you're always going to be flooring it. You're only going to know park or flooring it. And you're wrecking yourself because that's the only things you know. Fear stops you from trading. or blowing out and going margin call. Or when you're trading as much as you can, the most leverage you can afford because your broker allows you to do it or your funded account says you can do it. And you're only expecting yourself to be right all the time. And that's not how you're supposed to learn. That's not how I teach. And you're not going to be the exception to the rule. As much as you want to be able to come back and say, I showed him. No, you didn't. You know how many accounts you've wrecked. You know how many swipes of your credit card you've wasted money on trying to do stupid shit. I know it looks easy, but this is 3 decades of experience. You don't have that yet. And you're going to have a longer learning curve by avoiding the things I'm telling you to do. To sit out here in price action, don't talk to your friends. It's class time. When the markets are operating, you're watching price action. You're weighing out all these things and seeing, does price support this idea? Does price negate this idea? Is this PD array indicating something to me? And you watch and observe and you study it. The fact that you're doing it right now when the market is hard and anybody says it's easy right now is a lying piece of shit. I don't care who they are. I don't care how long you've watched them do this, that, and the other thing. If it's all clout when they say that. They're trying to make it seem like they know everything. In this environment, I don't know everything because there's interference constantly coming in by our president. There you go. I said it. So we went one more time into. Let me make sure I'm doing this right here. That's a sell side liquidity pool. I thought that was the halfway mark of the open the regular trading hours range. I thought that was this. Watch. That was the initial one here. So now we have this. Okay, so there's your mid range, okay, or equilibrium of regular trading hours range. We didn't trade to it here yet. We're below this gap, and we're spending too much time inside this gap here. So it could drop back down in here and touch this. I'd prefer it not to do that. If we can run up into this area here, I'll kill the stream at that point and consider it a profitable learning experience. But simply where a fair value gap forms inside of a present narrative, time of day of week, uh, the market structure that's in play. In other words, where are we at in the range? When we were down here, and I was telling you, watch that low. I'm not looking for that to go down there and accelerate. It could. I could be wrong, and you could have watched me be wrong about it. But the things I was teaching you, that's the benefit of learning from a mentor. My experience, I lent it to you and told you that these are problematic things for a continuation going lower because we're all one-sided right from the beginning. And the time of day, 10:30 going to 11 o'clock, that's usually the macro during lunch hour. And that simply is from here's 10 o'clock. Oops, gotta move it over one candlestick. Apologize. Right there. So there's 10 o'clock. So when we're here, where is liquidity going back to 10 o'clock? What's the first short-term high? This one right here. So macro for lunch is retrace back to that. That's it. That's all it is. Now it can take that high and continue higher, or it could take that high and go lower. That's not the macro at lunchtime on a Friday. You're not concerning yourself with that. You're just simply expecting it to do something like that as a observation to study. That's all. That's all you're doing. So here's that fair value gap that formed right before that sell side was taken, right there. Okay, what have I been teaching you? Use this one as an inversion fair value gap. We traded above it here. It couldn't even find its way back down to touch that. That to me is indicative. It's indicating that we have an underpinning of the marketplace where they possibly have a lot of people trapped short here. And I don't need to know what specific price levels and look at footprint and all that stuff to determine that simply because I was outlining the whole criteria of what we just watched while it was forming. Too many candlesticks inside a fair value gap. It needs to be one, maybe two at most, and leave. Leave. Think about it. If you're in a hurry, you got somewhere to go. If you're married and your wife's ready, she said, "Hey, let's get out of here." The kids are packed up. They're all in the car. She's like, "Okay, I'm ready to go." Well, I got to go. Well, you should already had that done. You should already had that in your pocket. You should already had this pair of shoes on. That type of thing. So you're in a hurry. Why? Because it's time to move. It's time to go. It's time to go. Your wife is pregnant and a water breaks. It's time to go. Now, I've been with two different women that have born my children, and both of them, for the life of me, when their water broke, to me, I'm ready to go. It's time to go. I don't want to be seeing my kid fall out between your legs. I don't want to see that. We got to get to the hospital now. Both of them are like, okay, and they're in there making a sandwich. I'm like, what the hell are you doing, woman? Your water's broke. You're standing here with a towel between your legs and you're trying to make a fucking bologna sandwich. Right now, you need to do this now? She goes, no, 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 you don't understand. Once I get there, I can't eat. They won't let me eat. I'm like, you're about to have a baby. It's time to go. We got to leave. We have to go. Two different senses of urgency, diametrically opposed. And it doesn't make sense to me as a husband. I was like, okay, it don't make no damn sense. Okay, you should be freaking out. Like you got to get to the hospital. Like you have to get there. And they're just calm. Like no, no, no. I've been around the block before. I know what this is like. Once I get in that bed, they're never gonna let me eat until I have the baby. And if I'm in there a long labor, that's miserable. I don't want to do that. And I heard her saying it. Both of the women, both of them, Cody's mom and my wife, both times said the same thing. And I couldn't understand it. Even seeing it the second time, I'm like, "We have to leave. Like, we have to leave right now." Well, that same sense of urgency is what you wanna see in these fair value gaps, because if they're valid, if they're very much in the right side of the marketplace, they're not gonna waste your time. They're they're gonna try to run. They're gonna use that moment, then sharply leave it. That's what you wanna see. You wanna see that type of thing in price action. You are not seeing that here. You are not seeing that at a low of day when the market was all one-sided. Now think about what we've covered here, okay? We're talking about problematic scenarios, looking at periods where price may do something. It could do it, but I'm not, if you're listening to me, even though it could have went below that low and went significantly lower, I'm not willing to take that trade because of the things I've outlined here. Now, for some of you that are short right now because you wanna be able to come back and say, I hope you have the balls to come out onto social media and say, "Yeah, I was trying to fade ICT and I got wrecked." I want you to listen to me. I'm not gonna come out here and bloviate nonsense that isn't useful information. I want you to protect yourself because we are in a market environment right now that is absolutely war. It's war. It's not gonna be given to you easily. You're not gonna walk through the market and just la 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 la, reach over and pluck a rose and sniff it and say, "Oh, look at that. This is everything's wonderful right now." I have to work for my trades now, and I don't know how long it's gonna be before it goes back to a more relaxed setting. I assume that basically, while we're over there doing what we're doing in the Middle East, it probably won't be like that. So if I'm telling you I'm carrying myself that way and I'm respecting the risks, why would you, as someone that's just started, why would you think? So arrogantly. You think I'm arrogant, but why would you think so arrogantly of yourself that you know more than someone that with 3 decades of experience? Just simply because you wanna have clout on the internet and you're gonna risk your money trying to prove something when you don't even know the outcome is favorable or not? You just wanna be the opposite side of me. That's wasting your time. That's literally wasting your time. Instead of saying, "You know what? This guy's doing this for free. He's explaining it. It's panning out in the charts. I didn't understand the logic as he was describing it, but now look at it. You know, I could have protected myself instead of trying to do some dumb shit." And that's what social media has become right now. It's all like an arm wrestling match. Who can be the smartest? Okay. I'm not smart. I'm just blessed. And I prefer being blessed over being smart. There's no competition in being blessed. You can't outgive God. See that? Flirting up there? That's Phil. That's Phil. Take a quick look at ES real quick, see what she's doing. Okay. Did it get into its inefficiency up here? Let me see. Almost. The high, 81 quarter, 81 quarter. So right to the tick. Eh, I would prefer to at least give me one tick above it. Let me see Dow. That's buy side there. Let me check. Yes, one more time. I'm sorry. Yeah. MNQ. So she is the weaker. So now watch. I want to see this candlestick go back above. If it wants this here, it needs to go back above consequent encouragement. It's already done more than I would. It's already done enough to say I'm not interested in it now. See how we close right there? That's that to me. I would not want to be seeing that at all. So let's assume for a moment that we went long in here. We went on a limit order inside of this portion of the gap, trading as it can get close to the high of the inversion fair value gap. Let's say you would have built in a position there, and I had two contracts on and a stop below that low there. Because it did that right there, I would have peeled off one. I would reduce my size and say, okay, I would be out somewhere in here. We'll just use the open of that candlestick. So from here to here, that's all that one single contract would have done. I'd have the one left over to see if it can move in my favor, but managing the position when it gives you indications that everything isn't as it should be in a perfect optimal setting. You have to think like this right now. I know it probably seems like to some of you, you're overthinking it. It's too complicated. Okay, these are all the people that come after, and they never tell you anything in advance. They always gonna come back and try to correct me or correct other people that are doing it. You're seeing things called beforehand, outlining it. And that's why I mute those type of people. Because number one, you're not going to get any clout off of me. Two, you don't know what the fuck you're talking about because you didn't present anything beforehand. You did nothing beforehand. So you're not teaching people. You're just trying to have a reaction. It makes you feel good because you're at work. When I'm telling you that you have to have some measure of accountability to your model. So in other words, It's simply not enough to say, okay, this is what I like to look for when I go long. This is what I'm looking for when I'm going short. Okay, what happens once you're in the trade? How do you manage open positions? If you're just simply going to say, I'm going to take my full target or nothing, well, that's too myopic for me. Because in this climate that we're seeing here, there's a lots of opportunities where I have outlined very specific criteria where I think the market's going to go. And it goes one tick away from my limit order in a real account, not demo, real money. So you have to dial back your measure of precision when you're trying to get the money out of the market and putting it into your account. Don't be so perfectly minded about your exits. Try to make sure you secure something. But the extreme side of this is while you are holding a position and you can afford to take something off, if it flashes indications to you that things in a perfect world, it should have never dropped that candlestick right there. It should have maybe came down into the upper half of it, maybe wick to the top of this line here. Perfect would be not even touching it and leaving the body in the upper half and then resuming and going back up. That's what I would have rather seen. But as soon as we drop that candlestick like that, now we're 50-50 whether or not that takes that high out. We could stay in a range now and do nothing below that low and nothing above that high. It could just go slop rest of the day. Why? Because it's Friday. They got traders offside right now, and they can carry them, drag them through the weekend, and then damage them on Sunday's opening. You don't know what they're doing on the open at 6 o'clock on Sunday. I don't know that. I'm right a couple times, but I don't. I have to sit and wait. Where do we open at 6 o'clock on Sundays? I have to know what that price is. But once I get that price, then right away everything is now within my grasp. I can see where we're going to make the weekly high, where we're going to make the weekly low, what's Monday's high and low going to be. All those things are helpful and known to me based on where we open at 6 p.m. But until I get that first opening price, I'm blind as a bat, just like you guys are. I have no idea what it's going to do. And now we have gap risk that's astronomical, meaning it could be extreme gaps, way beyond what would be reasonable because of all the stuff that's going on around the world. So I should have ate when I got back to the house and break my fast, but I didn't. I had all this energy. Man, you got to take drives before you see the opening bell and do this more often, ICT. Trust me, if my wife would have been home, it would have been not happening. Matter of fact, I'm wondering where she's at right now. She should have been back by now. All right, so we were unable so far to get to this high. Gun to my head, because I'm gonna end the stream here in about another 2 minutes or so. Gun to my head, I anticipate this being taken out before the lower low, if it were to do it. Okay. If it leaves this intact and takes out that low, that could be very heavy for the PM session, and we could probably just see it just keep wilting going lower. This is where I would anticipate it drawing to. And let's say it this way: say I was short up here in first presented for everybody got. My stop loss would be one tick above this, saying if it goes there, I'm wrong. I don't want to be in it any longer. If I were long from down here, I would be targeting that level there. So what does that mean? That's why I'm saying that level to me is more important than the lower low of the day, because this level being traded to does two things. It stops out people that are short from up here, and it runs against the idea of anyone that went short in here, or shorted there. So it's a more probable level to trade to because there's enough reasons to cause damage and unseat somebody from the bus. Okay. Take a quick look at crude. on the 15-minute time. I mean, I don't know 1 minute chart though. Look at that. Right. And euro dollar real quick. I'm starving. Mm. I wouldn't be comfortable if I was long on Bitcoin. I'll just say that. I'm not trying to be mean or twist a knife or anything like that. But this looks it looks bad. XRP. I got a request for that. I just remembered. I apologize. You probably were thinking he's not going to remember. I just did. And it, it's going lower. There you go. I don't see anything bullish there. I wouldn't see anything there as bullish. Yeah. I know you guys have all kinds of belief in this thing doing something, but it's dead money. Quick look at gold. Let's breeze through all of them real quick. I'll mind the color. It's just I'm just looking at the range. And silver. Copper. I like those lows. MNQ. Stay out. Candlesticks low. 78 half. Low. 78 half. That's your third PD array. If it's going to go for this, it needs to be defended by this inversion fair value gap. If it loses this gap, then I would walk. I'd be done. Wouldn't be interested in doing anything. And now that's what it's done here. So I would not be interested in doing anything else. I would just move to the sidelines and wait for the PM session, which I'm not coming back for to talk about anything like that. But so hopefully you learn a little bit about weighing whether or not it's a trade worth taking, how to weigh out in a position. Because think about what I said earlier. Say I went long here and I closed one of two contracts here because it did this. It warned me that I'm probably going to see a deeper retracement or get stopped out. So why would I let my two contracts stay in position when I'm seeing that it may be wrong? But you want to give it a chance to see if it can still deliver it, because we're in a condition in the marketplace where it's unruly. It does whatever it wants to do now because of somebody, causing something to be a opportunity. Okay, so let's say I'm trying to choose my words carefully because I don't want to build. I don't want to be put on the radar for it because he's very vindictive. Let's just say it that way. And by me taking off one there, as I was outlining, I would take one off, and the stop right here would have been stopped out on the bounce. So I would have had just a little bit of profit on the remaining one contract. But up here at the open on that candlestick there, that would be the difference for the one. So this would have been gainful, quote unquote profitable, but stopped out because of the indication that this didn't deliver as it should. It should have never came back down into here. So that's kind of like where I'm getting at. I think that's going to be it for today. I don't know if you learned anything, but I hopefully communicated enough in here using the inversion fair value gap concept, time of day, and that run up in here. It got close to that, but failed. And that's what I'm encountering right now. for people that are saying when I say it's hard. In previous sessions before we moved into all this Iran crap, the, uh, the draws were a lot more easy. They're very trustworthy. So what I'm learning is if I can get to a level that's just short of where I think it's gonna go, think about what I highlighted for Wednesday's trading in the Nasdaq. I told you the relative equal lows that I was aiming for, and you watched how I executed on them. Okay, and you see the fills, and you see it's not what's it called market replay. Okay, um, by having a lower threshold of exit, not demanding perfection. That's what I'm finding is working right now in this harder climate. My concepts still work, but my exits, they are always the thing I'm always working on. So what I've done is I've dialed it back considerably. So what would be used here in a perfect world underneath this condition of difficult trading? Just simply taking out this high here, and as the candlestick goes up, just trail it below, just strangle it all the way up on a 15-second chart, and then get stopped out, and you're done. Not even requiring it to get to that. You're gonna chase it. Once it takes out the high, chase it on a lower time frame. You're gonna get stopped out, and it might move a little bit more than you thought. It might go above that target there. But in this environment, I'm seeing lots of failure to launch. Things that just should have happened but aren't happening. So if you're gonna trade, if you're gonna participate, just dial back your expectations in terms of how much you can take out and just be thankful that you got what you got. So hopefully you learned something. If not, I apologize. It was more or less me burning off adrenaline because I didn't get the opportunity to spend it how I wanted it. So until I talk to you next time, I don't know when that will be. Enjoy your weekend and be safe.